Check 1, 2.
Go! Curious about real estate? Yes! Then you've come to the right place. Get the knowledge you need. Get over the fear and get started. This is the Michael Quarles Real Estate Show with your host, Michael Quarles.
Hello, everybody. Michael Quarles with a brand new podcast. Yes, we're starting our podcasts again, which feels really good to me. And so those of you that were looking forward to them and when we stopped doing them, I apologize, but here we go again. And remember, if you have a question, send it to support@bsffacademy.com. One more time, support@bsffacademy.com, and Riley will get it to me for our next podcast. This is podcast 151. Here we go. There are 5 questions. Question number 1, how do you know if you're in a good or bad market? For example, there are 65,000 homes in my market county at or below the median home sales price of $317,000. Over the last 6 months, 94 have been sold to non-owner occupant cash buyers. Is that a good amount of activity for cash buyers? Well, if you divide 94 by 6, so now we have 15, 16, something like that, almost 16 houses a month. That is 4 a week. If you were an investor there and there were only 4 of you, that means that you would be buying 1 house a week. If I did my math correctly. If I didn't, I apologize. However, in every market where you can tell that there's an abundance of properties being sold for cash to investors, that tells you one thing, and it should scream itself out to you very loud and clearly. And that is you're losing opportunity if you're not marketing to your market. So what you're doing is you're allowing somebody else to live the dream that you have. You're allowing somebody else to take over your life by making your money and putting it in their back pocket. Now, if you want to do that, that's fine. I just personally find that if someone buys in my market, although I appreciate them and I looked at them as a benchmark, it still frustrates me a little bit because I didn't take the steps necessary to make certain that I had that opportunity. I can't live with that concept. Now, if you can, congratulations. But if you want to be highly successful, then instead of asking that question, send some marketing out and ask the seller their questions. Did you have a house you were hoping to sell? The word hoping is a key component of that question. Is the house currently listed with a real estate professional? It should be a no answer. If it's a yes answer, go on to the next seller. Third question. What do you think the home would appraise for in today's marketplace if I was going to send out a professional appraisal? They must give you an answer. If they don't give you an answer, go on to a seller that will. Fourth question. Let me tell you a little bit about what I do. I buy houses like yours all the time. One of the nice things about my program and what I've been told by sellers that I've bought houses from is they like the fact that they can have their money on the day of their choice. I'll be buying your house today cash. I'm going to be taking care of all of the repairs, whether I've seen them or not. So I'm going to take care of the roof certification, the appliances, the mechanical certification, the termite certification, all those things. I'm also going to pay the commissions, the closing costs, things like title insurance, escrow fees, transfer tax, recording fees, wire fees, all those necessary fees that are required within a real estate transaction. So when we agree on a price today, you can be assured that that is the amount of money minus the loan, if you have one on your property, that you will receive at the end of the day. Those are the things that we should be asking. Whether or not to market to our market when we know we have 94 people that bought houses for cash in the last 6 months probably is not a question to be asked. Let's get in there, let's get on that horse and let's ride it. Let's get on that bull, let's ride it. People are making money every day. Make sure it's you. Question number 2. Is a little activity in a market a good sign, or is a lot of activity in a market a good sign? Well, defining a little, I don't know what that means. That could be 0, and a little is from a perspective point of view. We really have to define what little is. Now, if I have a marketplace and only 2 houses in the last year have sold at an equity basis that would cause me to make money on it, then that's probably not going to be a market I'm going to be overwhelmed with and overjoyed with. So I'm going to go to another market, and I don't really care if there's a lot of activity in a market. I hope there is, because we as investors, we have to compete with what our peer group is doing. And a part of our peer group are brokers, realtors, and real estate professionals. Well, these people are very good at what they do, and they're supported, most of them are supported by National Association of Realtors, NAR, who spends millions of dollars a year promoting the fact that if you have a house to sell, you should use a realtor or a real estate professional. And most of our sellers should. The sellers that we buy from don't want to use a real estate professional, so we should have little angst about referring them to a real estate professional, because that's going to be a sign of motivation on their part. If you ask someone, go ahead and get your house valued by a real estate professional, and they tell you, I don't want to use a real estate professional, guess what? You have a highly motivated seller that wants to sell to an investor. If they say, thank you for suggesting that, you have a great day, then you know that you haven't lost anything, because you can't lose what you don't have. So don't worry about it. So I'd rather be in that high impact market that a lot of my peer group or my benchmarks are in. And again, I'm going to fall back to, if somebody else is making money, shame on me. Now, I'll help anybody in my market make money as long as I'm making money too, but I still look at it like I should be making all the money. That's just my personality flaw. And if your personality says, I don't want to make any money ever, then that's a good personality for you. It's not mine. But we live our life as real estate investors for pretty much one thing: to get rid of the JOB, change our life, have that paradigm shift, and at the end of the day, help those people who cannot help themselves. When you have an abundance mentality, you take your mentality and your abundance and you help those people that cannot help themselves, because you have plenty for yourself left over. Don't worry about what anybody else is doing, only worry about what you're doing. And if you're not doing anything, either stop listening to the podcasts and decide to do something else in life, or start doing something. It's plain and simple. Question number 3. What factors do you look at when you enter a market? How many houses are in the market? What percentage of those houses have an equity base? That's all I really care about. I want to make sure there's an abundance. I can't buy them all, but I know I'm going to buy a percentage of them, and I want to make sure that there's enough of them for me to buy. Because this is a numbers game. Let's break this down in just numbers from that perspective. If I send out a post or 100 postcards, I know I'm going to have a 0.5% to 1.5% return from a call volume perspective. I know from that call volume, less than half of those people are going to be serious about selling me their house. So let's assume for a second now that's 0.25% of that postcards that I send out are now just slightly or serious about selling their house. Of that 0.25%, how many of those are actually going to qualify to sell me their house because they're willing to negotiate the sales price less than 85 cents on the dollar over the telephone? Because we don't make appointments with people that don't say on the telephone that I'm willing to sell my house at least at 85 cents on the dollar or less. So you don't go out to the house where the seller says, I want full price or I want more than I think it's worth. You only go out to a house where they say, I'll take 85 cents on the dollar or less. So how many of the 0.25% who are willing to are going to say that? And probably that number is half of that quarter. So now we have 1/8. So how many appointments do you have to go on to before you get a contract? Well, that's about your training. That's about that's about your ability to communicate with the seller and tell them why our program is a better program for them than what the National Association of Realtors and the local brokers and realtors and real estate professionals are telling them through their advertising. This is about you at that point. The only person that can dictate favorably those numbers is you and what you say and how you say it. A lot of investors, they start off going out to houses like this. Are you going to be home tomorrow? That's what they ask a seller. If you are, I'll stop by, take a look at the house. I don't know why anybody would take a look at a house. I absolutely don't. There is only 3 things that we do when we go out to an appointment to buy a house. And 3 things and 3 things only. Thing number one, confirm what we believe we know. So I've done my CMA, I've done my due diligence, I've done my 6-packs. I believe I know what I know. I still have to confirm it. Just because the piece of paper says it's pink doesn't mean it's pink until I see the color of the house. The second thing I have to do is determine what I don't know. As much as we think we know, there are things when we get to the house that we will see that we'll go, oh my goodness, I didn't realize that you had a rental in the back of the lot, or you had an easement that you granted to your neighbor that now attaches to the property, or that you were a backyard mechanic and you've been putting oil or draining the oil on the ground. Things that we don't know that affects the ability for us to be profitable. And the last thing that we're there for is to get a contract signed. I am not there to look at a house. I know what one looks like. They have a front door. That front door is typically 3 feet wide. That's it. They have a doorbell, door knocker, or neither of the two. And don't ever use the doorbell. If you walk up to a house and you use the doorbell, you're a wimpy investor. Plain and simple. If the FBI, if the police department, anybody was wanting to come over there to your house and obtain you, they are not going to use the doorbell. Can you just imagine the FBI ringing the doorbell and wondering if you're home? No, they're going to knock down that front door, enter your house, and obtain you. Well, of course, we're not going to do that to sellers, but we want to have that power and that persuasiveness, and you start that persuasiveness off by knocking on the door. Okay? Plain and simple. Question number 4. We have a seller who wants to sell, but wants to know how much lower his capital gain tax bill will be, or how to lower his capital gain tax bill. He said he just wants to sell because he's getting too old, so I don't think 1031 exchange is what he's looking for. What are some strategies to use in that situation? Well, there's no way to lower his capital gain tax that I'm aware of. You've got a profit, you have tax. If you've been writing that or depreciating that property off, writing that off, you probably have a recapitalization of that depreciation. You probably have a penalty on that. But what you can do is do an installment sale or a seller finance transaction where the seller is getting their boot or their investment back first in payments, which is non-taxable, tax-free. And then when they start receiving their profit, then that's taxable, but it's only taxable as they receive it. As an example, you have a $200,000 house. I bought it for $100,000. I'm selling it for $200,000. You're giving me $100,000 worth of profit. If I finance that for you at $1,000 a month, for fully amortized, whatever it is, well, the principal that I'm getting paid back subtracts from the original $100,000 that I invested. When that $100,000 is at zero, then I start paying tax on the remaining portion that I get as I receive it. So if paid back I've gotten paid back my $100,000 after 8 or so years, and then I start collecting another $1,000 a month, then I have tax on the interest, and then I have tax on the principal that I'm getting until I receive all of it. Now, the next question is, but if we sell the house again, so we're buying a house, seller financing, doing an installment sale or a seller carryback so that the seller has a deferred tax basis, but then we end up paying off the house, don't we at that point have to pay off the seller? Most of the time, yes. But if the seller doesn't want to be paid off, then that's when you negotiate in advance exchangeable collateral. And if you're part of my coaching program, it's what we talk about. So exchangeable collateral is you taking their note that's against the property that you're reselling, and once you sell that property, you're going to take that note and attach it to another piece of property. That way, the seller doesn't get paid back. They have security because they have another tangible asset that if they had to foreclose, they could foreclose on to regain their investment or the money they loaned you. You could also, instead of doing an exchangeable collateral, you could just keep it as an open note. Now, is that in the best interest of the seller? Absolutely not. But however, sometimes it is in the best interest of the seller, very few times, very, very few times, if you do not have another piece of property that you can collateralize. And shame on us as investors if we over-collateralize property, which is perfectly legal. I mean, if you think about it, that's why people go and do a short sale, is because they're over-collateralized. So you could literally take somebody's note that did a seller carryback that doesn't want to be paid off and go place it on a piece of property that's already at 100% financed. And now you have, let's say you have a 200% financed property. There's nothing illegal about that. But you remember, we do things ethically, morally, and then legally. That's why we always want to make sure we put ethics and morality in front of legal. Just because something's legal doesn't make it right for us to do. Great question. Big answer. That was a short answer for the big answer.
Thanks for listening to Buy, Sell, Fix, Flip. We'll be right back. Are you running out of leads? It's time you tried Yellow Letters at yellowletters.com. Get motivated seller leads through yellow letters, postcards, zip letters, typed professional letters, greeting cards, door hangers, and business cards. Yellow Letters is a full-service marketing company created with your success in mind. Get the personal attention you need to get your direct mail campaign started and get in touch at yellowletters.com.
And we are back in 3, 2, 1.
Question number 5. How does an installment sale work? Great question. I think if you're going to do installment sales, and that's something that you want to do, and I wouldn't personally, as an investor, that would be one of the last things I'd want to do. I'd rather do a seller carryback and not an installment sale when I get constructive notice title. So I'll have a warranty or grant deed, and the one I don't until I fulfill the terms of my installment sale. So it's like the last thing I'd want to do. I'd rather do a sub 2 with seller carryback. That's my best thing. If it's a free and clear house, and of course I don't have a subject to with the seller carryback, it's going to be a seller finance first. Now, I could take a subordinated seller carryback if I had any repairs to do on the house. And the reason I'd want to do that is because the subordinated carryback would allow me to go ahead and borrow my construction or my rehab money, which would be placed in first position in front of the seller carryback. And there's advantages to both myself as the investor and the seller themselves. It's not a negative to the seller, because what's happening is if they had to go ahead and foreclose and to regain their loan that they made you on their seller carryback, and you use the first money, as long as you don't pocket that money and go play in Vegas with it, and you actually applied it to the property's gone up in value. So you're just trading cash for construction. And in the seller, if you do it correctly and explain that to the seller correctly, then it's not a hard thing for the seller to grab onto and gravitate to. That's what I would want to do. Now, you guys can do whatever you want, but when we look at real estate investing, I've seen them. I've had insomnia, and I've stayed up all night long, and I've watched some of these absurd infomercials where these guys, I'm not even going to say the guy with the long hair that's chubbier than I am, that talks about how rich he is. I just think that's appalling to me that people actually are in our industry and they actually behave that way. We have an industry that should be a professional industry. We should treat it with respect. We should do those things that causes people to say we're honorable. And when we make a commitment to somebody, we should follow forward as much as we can to meet that commitment. Now, I'm human just like everybody else is, and I know that when you make a commitment and things get in the way of your ability to perform on that commitment, that doesn't feel good. But if that happens, then you have to do what it takes for the parties that are involved in your commitment to understand that the influences in changing your commitment weren't something that you did lightly. that you took that in a responsible manner, and you made sure that everybody, all the parties involved, understood. But what we shouldn't do, and I know it's not doesn't have anything to do with question number 5, but what we shouldn't do as real estate investors is enter into an agreement to purchase a house knowing that we're not going to buy it. Plain and simple, I'm going to say that again. We should not enter into an agreement with a seller to buy a house knowing that we're not going to buy it, that we don't have the ability to buy it, that we're not monetizing that contract for the seller. We should not do that. But there's a lot of investors that do that. They start off their career and they heard someone say, hey, just get a house under contract and sell that contract to somebody, and they don't even know who that somebody is. But they've promised the seller that in so many days that contract's going to close, or that house is going to close, and you're going to give money to that seller. And then all of a sudden, they're packing, they're getting mentally on with their life, they're overjoyed that they have their house sold, and all of a sudden you're going to have to call them back and say, hey, I was lying to you, but you don't say it that way because you make some excuse for something else. Well, let's be honest with the seller and let them know that what our intention is. If we let a seller know that my intention is to sell the contract to somebody else, if I can't sell it within this time period, I'm going to have to give it back to you. If you say that to a seller, I have no issue with what you're doing. If you are forthcoming with a seller and tell them what your intention is, I do not have an issue. But most investors are so afraid to tell a seller the truth. Because if they do, they think, well, the seller's not going to contract with me because I'm telling them what their expectation should be. But that's our job. We should tell them what their expectations should be. Plain and simple. I'm going to enjoy doing these podcasts again. I am going to take them a little bit more seriously. I don't know if you can tell in my tonality. It's not always going to be fun for whoever writes the questions, but I think it's important for me to give the answer as much thoroughness as I can give the question. I want whoever asks me the question to come away with an answer that, whether they appreciate the answer or not, it's the answer that they should be really seriously considering. I'm also going to do this. We stopped our coaching program a couple months ago. I'm going to open up 4 spots. So if there's 4 of you, and it's, I think, November 6th on a Friday of 2015, because these podcasts go on forever, so we have to put a date on it. So I'm going to take 4 new students in the month of November. If you want to be a student of mine, all you have to do is send us an email. We'll get you in the program. I'm going to take 4 people. Now, my program is a year-long coaching program. It's $5,000 to get into it, and then it's another $5,000 from the first deal that we do together. I don't know if it's expensive or cheap. I don't know. It's expensive if you don't use the information that you're going to be given, and it's cheap if you do. This is about your future. I already know how to buy a house. But I've been craving, I've gotten it in my blood again. I've been craving to help people again, which is why I'm starting to do the podcast, and I want to bring 4 people into my coaching program. But I got to tell you, if you're worried about getting your feelings hurt, I am not your coach. If you're worried about, words that aren't favorable, I'm not going to tell you what you want to hear. I'm going to tell you the truth. If you're not prepared for the truth, don't get into my coaching program. If you're prepared to succeed and you want to succeed, then get into my coaching program. We're going to do a lot of things. The first thing we're going to do is look at your marketplace. We're going to determine who in your marketplace are the candidates or most appropriate candidates for you to be spending your marketing dollar on. And then we're going to start spending some dollars. And then we're going to learn conversations. I'm very scripted. I believe that if you're going to have a conversation, and we are as real estate investors with sellers, if you're going to have that conversation, do it on purpose. Don't do it half-assed. Do it on purpose. Know what you're doing. Understand the little things that you do, how they influence the seller and their decisions to say yes to your offer. And when you do, you'll actually make lower valued offers than your peer group, and you'll win. You're creating win-win situations for you and the seller, and it's important for both of you to know that that's what's happening when you contract with them, that they're winning and you're winning. But if you're afraid of the truth, I'm not your coach. I am absolutely not the guy. There are people out there that will tease you with lies, and I am not going to do that. But if there's 4 of you that want to get in the coaching program, I hate sounding like my preacher, but every time I go to church on a Sunday, the last thing they do is ask for people to walk down the aisle and give their themselves to God. I'm absolutely not even close to God, but if you want to learn real estate investing, just walk down the aisle and let me help. But be prepared for the truth, and be prepared to make some money, and be prepared to learn how to do what we do and do it on purpose. My goal is to show you and teach you how to buy houses and how to systemize yourself buying houses so you don't ever have to buy a house. And one more time. My goal is to teach you how to buy a house and systemize your house buying so you never have to buy a house. When you can have a business that doesn't require your ability, you absolutely have a business. Most of us get into real estate investing to get rid of the JOB, and all we're doing is creating a JOB with the STRESS. Don't do that to yourself. Understand and learn how to buy a house. Understand and learn how to systemize to buy the house, and then let someone else buy it for you. It's okay. There was a guy that said he preaches, the less I do, the more I make, and I thought he was full of crap. Until I realized how true that statement is. The less you do, the more you make. Again, 4 people, month of November. Talk to you guys soon. Bye-bye.
Thanks for listening to the Michael Quarles Real Estate Show. Get more info and stay in touch at michaelquarles.com.